Thursday. We are meeting 7 p.m. We're also doing a 10 a.m. session. And all I'm doing is coming to you, talking to you about tax and accounting issues. So, this is our third broadcast. And those of you who are joining us, those of you who are still to join us, welcome, welcome, welcome. I'm just going to go through a few things while I'm waiting for a few people to join us. Now, today's session is going to be the usual 30 minutes. We had a similar one in the morning, and it was very engaging, very, very interesting. We had, so far, we've had quite a lot of viewers. People are seeing it, they're picking it up, and I think we're picking up a bit of speed. So, for those of you who are here for the first time, we focus on tax and accounting matters. That is what we do. We talk about SARS, we talk about any authority, revenue authority that collect funds from their people. We give you advice how to run your business. We teach you how to do it the smart way, how to make a profit, but basically tax and accounting, finance, entrepreneurship, business. That is what we are about on this channel. So when you finally join, those of you who are joining, please do enjoy the broadcast. So we have a few topics today, and the big topic we're going to talk about is tax. So I'm just going to give it a few minutes and wait for one or two people to join, and then we'll get right into it. Sit tight, put on your seatbelt. It's gonna be pretty exciting. Excuse me. So today is the 2nd of July. We have just entered the second half of the year. If in the first half of the year you didn't do things right, here's an opportunity to do things right. Here's an opportunity to improve, and here's an opportunity to do things that you never thought you could do. Dare to do something different. On this channel, we will teach you, we will guide you. I am a business coach. By profession, I am a tax practitioner. I'm also a professional accountant, and I'm a corporate governance specialist. So I am very much um, well poised to help you in all that you need to run your business, to make a profit, to do well, to be compliant, to make sure that you are running your business the way that you should. So I think I will start. Our main topic tonight, as I said, is tax. We're going to be discussing tax issues. Now, I'm not going to be boring. I'm not going to be giving you textbook definitions. I'm not going to go into old school, um, theories. I'm simply going to give you a brief overview. What is income tax? What are the different types of taxes? And of course, I am based in South Africa, but tax is tax, accounting is accounting, profits are profits. Running a business is the same anywhere in the world. So please do not feel that this doesn't apply to you because I'm coming to you from South Africa. Whatever it is we do here, a lot of it you will do anywhere around the world. So let's get into it. As I said, we're talking about tax matters, and I'm going to start off with a definition. I'm going to tell you what is income tax. Now, income tax is a very broad term. And as I said, I'm talking to people of all walks of life at different levels. Not everybody is an accountant. Not everybody has been running a business for a while. Not everybody knows these terms. So I'm just going to give you simple definitions, simple terms. I'm going to encourage you to, to engage. If there's any questions, if there's any issues, please do raise them. So first thing, we said, what is income tax? So income tax, my definition, is the means by which a government collects revenue from its citizens. So this is how any government in the world is able to collect revenue, is able to receive and be able to run the economy of the country. As you know, they're supposed to be building roads, building hospitals, schools, dams, and all of that infrastructure. So a government uses income tax, poses income tax, and is able to then collect revenue from its people. So income tax is a broad term. Income tax for an individual is generally termed pay as you earn. So that is the tax that as you are receiving your salary at work, they deduct, we say they deduct at source. So by the time you receive your salary, they have already deducted the income tax. They've already taken their pay as you earn, and you are just left with the net amount. So that is the first instance of income tax that we're going to talk about tonight from an individual level. Just you and me working somewhere, receiving a salary, we are taxed. And that tax is called income tax. And by the way, I must tell you, South Africa is one of the most highly taxed nations in the world because our tax tables go up as high as in the late 40s, 45, 46% tax, which is much higher than other countries. Okay, so it's on a sliding scale. It's not like a set percentage. The more you earn, the more you get taxed. Of course, there are those who are below the taxable rate, and those that do not get taxed are obviously, earning slightly less. So, of course, as a government, the government is trying to make sure that they are being fair. So the more you earn, the more your salary, the more you're being paid, the higher the percentage of tax. The one thing I need to warn people is sometimes people are doing two jobs. I've come across people who have two employers legitimately. So they're receiving two pay slips, they're being taxed. Now, remember, at the end of the year, you will get what we call an IRP5. It's called a tax certificate. It's a summary, and I'm going to go into that. It's a summary of all your earnings for the whole year, whether it's just your basic salary or whether you've got other earnings. Maybe you have other allowances, maybe you have medical aid, maybe you have retirement annuity, all of that income. Whatever you earn is reflected on that IRP5. It's accumulated into an annual amount. Of course, if you also have deductions like pay as you earn, like UIF, those will also show. If the company pays SDL on your behalf, all of that, some of which we already dealt with last week, but it will appear, that's my point, on the IRP5, it will appear on your tax certificate. Now, your tax on there is reconciled by the revenue authority so that they determine whether at the end of the day you owe them, they owe you, or whether the results are nil and whether you actually don't owe anything. So at the end of the day, every individual submits a tax return to some extent. And we talked about the fact that some people are auto-assessed and others have to submit their tax returns. Now, for you and me, the distinction is if you do not have unusual income, if your taxes are straightforward and all you do is you're working every day, you are employed by a company, your company gives you a pay slip, no extra income, no rental income that you're earning, then most likely you will be auto-assessed. And what that means is between the 1st and the 12th of July, you should receive an SMS from SARS telling you that you have been auto-assessed. Therefore, you do not need to submit a tax return. Thank you for those of you who are joining us. Good evening to everybody. And I'll introduce myself. My name is Carol, and I'm calling all the way from Johannesburg, South Africa. On this channel, we discuss tax and accounting matters. I'll go into the rest of it later. But we do have a YouTube channel, which is where you are connected, and there are many videos there. Please do watch our videos. Please do subscribe. Please do like. Or if you like what you're hearing, share it with someone. Let someone else benefit. Let someone else learn a little bit more about tax and accounting. So back to the individual like you and me. If you have a tax certificate and your employer has given you your tax certificate, a lot of you are wondering, now, what am I going to do with this IRP5? What am I supposed to be doing? Well, not much. If you've been auto-assessed, all you have to do is check and make sure that your taxes are correct. Your basic salary is correct. Everything should be as it is on the IRP5. Of course, if you have other things, like you have maybe interest you've received from a bank, all of that should also reflect on your tax return. You can then decide to accept the auto assessment if you're happy. So your IRP5 is like a backup copy. You keep it in case you ever need to submit it somewhere, or in case there's ever a problem, you have it. But for those of you who are not automatically assessed, those who need to submit your tax return, now you really need your IRP5, because you will use your IRP5 to enter and submit your tax return. So that's it from an individual point of view. I'm not going to go into the details, except just to warn you that if you are working somewhere and you're receiving certain perks, like for instance, a vehicle benefit, a travel benefit, cell phone, maybe the company's giving you a house, a car. Remember, all those perks will be taxed. Nothing is ever for free. So if you are receiving all these benefits, just ensure that your employer is including them on your payslip when you're being taxed. Because when they get picked up and it is seen that you have not declared them, you will be penalized. So I think from an individual point of view, tax, I've exhausted for tonight the subject. I'm going to go now into companies. Now for companies, many of you are directors of companies. Some of you are just shareholders. If you are running a company, you're a director, you're a shareholder, please pay yourself a salary. A lot of people are just paying their personal expenses out of the company bank account. That is not cool. It's not recommended. And remember, those expenses are now being picked up by AI. SARS is now beginning to see that people are paying personal expenses from the company bank account and not declaring them as salaries, which again will cause a huge problem for you. So in actual fact, what you should be doing as a director is paying yourself a salary and paying your personal bills from that salary, and keep the company bank account strictly for company expenses. Now, from a tax point of view, remember we said you only pay tax on the company if you've made a profit. So tax only applies if the company has made a profit. If the company has made a loss, then there will be no tax due. And remember, it's a straight 27%. So when we say income tax on the company, it's really income tax on the profit that the company has made. Remember also, as a director, there is a way, or as a shareholder rather, there is a way in which you can earn from the company without being subjected to those high taxes that I mentioned earlier. I'm sure you're asking me how. Well, dividends. If a company is making profits, they are allowed to declare dividends. Now, dividends are paid out to shareholders only, and they are at a fixed percentage of tax. So they are taxed in South Africa at 20%, which means before you get your money, the company already has to deduct or withhold that 20%. Now, I'm sure you can agree with me. Paying 20% on your dividend is far lower than paying 30, 40% or more on a salary. So as the director, as a shareholder, you can choose to have a very low salary, keep your tax low, and then every maybe quarter, twice a year, once a year, when the profits are there, you can declare a dividend, and then you can receive a dividend, which is taxed at a much lower rate. So those are some of the things that you can do that keep you within the law, but you're lowering your taxes. And everybody wants to reduce their taxes. Nobody wants to pay any more tax than they have to. So in this channel, I teach you, I show you all the different things that you can do, which are legal, which will not bring, they won't downstream cause problems. So we've talked about company tax. We've also talked about individual tax. Now, that is the broad income tax. But remember, there's also little things like VAT. VAT is a function of income tax, and pay as you earn, we've talked about, is also tax. There's customs tax. There are so many different types of taxes. When we talk about dividend, the tax is actually called dividend tax. So the company that pays a dividend out to its shareholder needs to actually declare and pay that tax over to SARS. Okay, so tonight you've learned a lot. I'm sure you have. I want to try and stick to my script, so I'm going to check what else I needed to tell you tonight. If you are working from home, you are allowed to declare home office expenses. Now, what are those? Well, for instance, if you are paying electricity in your home, you are paying your telephone bill, you're paying insurance, all of those expenses to a degree can be deducted from your income in order to lower your tax. Now, I'm speaking primarily to people that are self-employed now. If you're self-employed, remember your income is not being taxed on a monthly basis. So you are now having to do your provisional tax and your income tax return. Your question is, how do I keep my tax down? This is one way to do it. Now, it's becoming increasingly difficult for those expenses to be acceptable by SARS. But if you can prove that you are incurring those expenses in order to produce or to carry on with your trade, SARS will accept them. Any revenue authority in the world will accept them. But the big thing is make sure you've kept your slips, you've kept your receipts, and make sure that you apportion. It wouldn't make sense for you to say, okay, well, listen, I'm working from home, but I'm going to claim my entire telephone bill as a business expense, my entire, say, my rates, my insurance. SARS may not allow that because they'll simply say to you, well, you're not using your entire house to work. Therefore, apportion and say, for the portion that I'm using as an office, I will then say that those are the home office expenses I can claim. Remember, when it comes to things like rates and electricity and so on, you need to make sure the city of Joburg, Mbombela, of Tshwane, of Cape Town, wherever you're paying your rates to, they need to give you that bill so that you can submit those supporting documents. And believe me, SARS will ask for those supporting documents. So before they can accept those expenses, they will want to see those supporting documents. I think we've talked about rental income before, where we've said if you have a property that you're renting out and you're receiving rental income, you can actually claim expenses against that income. But those expenses have to be directly connected to that rent. So for instance, interest on the bond, that particular bond, yes, you can claim that. And again, the rates, the city of Joburg or, city of Mbombela, you can claim those expenses because they're directly linked to the rent. You can also claim things like commission. If you hired an agent to find a tenant for you, or you had to put an advert in Facebook or whatever it is, computer expenses, you can claim those. And of course, your fee that you're paying to yours truly, your tax practitioner, you can claim those. So all I'm doing is trying to give you tips on how you can reduce your tax. Make sure whatever you are claiming, you can validate by means of an actual receipt, an actual proof of payment. If SARS asks for proof of payment, and if you don't actually have a proof of payment that you kept from the bank, you may have to produce your bank statements. You highlight them, scan them through, and submit them. At the end of the day, what you want is for your expenses to be approved or allowed by SARS so that you reduce your income, your profit, your taxable income, and thereby reduce your tax. I hope I've helped somebody tonight. Next on our subject, we're going to talk about something a little bit different. It's tax related, but it's VAT. A lot of people register for VAT thinking, oh, yay, I'm finally going to get some money out of the Revenue Authority. And people actually come to me. They have the guts to say to me, oh, I've paid so much tax all my life. It's time I got something back from SARS. So register my company for VAT. I want to get rebates. I want to get refunds. Register me. And guess what? I have to sit there and educate them the way I'm educating you and say, listen, any revenue authority in the world giving a VAT number or registering an entity for VAT is not doing it so that that particular entity can benefit. No, 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 no. Once you register and you have a VAT number, guess what? All you are is a channel through which the revenue authority can actually collect revenue. So you then become their tool. You are charging people VAT because you're VAT registered, and you are remitting that VAT over to SARS on time, otherwise you're penalized to SARS. So don't ever for a minute think to yourself that this is a good thing. I'm VAT registered. I'm going to get refunds. I'm going to get rebates. That is not the case. In fact, there's only one class of people that actually gets refunds from SARS. And believe me, it's not that easy for them to get those refunds. And that's exporters. So in any economy, exporters are like gold. Every country, loves exporters. Why? Because number one, they're putting the name of the country out there. They're selling goods and services from that company. Number two, they're increasing sales. And number three, they're simply earning foreign exchange, forex, for the company. So exporters will 9 times out of 10 get refunds from the Revenue Authority, VAT refunds, but only based on the VAT that they've actually paid and that they can prove that they've paid. So SARS and any revenue authority in the world will want to see proof that any exporter has actually paid that VAT on that good or on that supply. They'll want to see proof of payment. They'll want to see the invoice coming in the name of that person. They will want to see that you are exporting. Who are your customers outside of the border? When did they pay you? What's your invoice? Did you make a profit? So they have a keen interest. Before you can be refunded, believe me, you have to go through a grueling task of proving. So don't for a minute think to yourself, if I'm registered for VAT, that means I'm getting refunds. No. And in fact, we've seen it increasingly over the years that getting refunds from SARS has become quite a nightmare. Number one, there's the waiting period. It's not so quick. And number two, the request for supported documents. They can even ask you where you're operating from. Send us a proof of your actual dwellings, your office, your rental space, because they want to know more before they can refund you. Are you a legitimate business? We want to see your trial balance, for instance, your transactions history. They can ask for your bank statement. So you must know that for you to get a refund, you would have to go through a lot to prove the fact that you are deserving of that refund. Having said that, people make a big deal out of VAT, but at the end of the day, all of us are paying VAT. If you walk into a supermarket, I walk into Checkers, into Pick n Pay, those are our main supermarkets here in South Africa, and I'm buying goods on my till slip. If I look at it, I'm still paying 15% VAT. And mind you, Parliament tried to increase that percentage, and unfortunately, fortunately for us, that did not go through. But my point is, you can't go around saying, I want to get back the VAT that I've been paying as a business, because even as an individual, you're paying VAT every day. You're not getting it back. So it's the same everywhere you go, anywhere in the world. VAT is something that any business or any individual has to pay without necessarily getting a refund on that. Having said that, there will be benefits to being VAT registered if you are, for instance, buying a lot of stock from VAT registered entities. What do I mean? Well, if I am buying stock from you, you have a VAT number. That means you're charging me VAT, and I have no way to put that VAT. I have to now include it in my cost, pushing up my cost, the cost of my goods, if I can't claim it anyway. But if I'm also VAT registered and I'm dealing with you who's VAT registered, then at least I can offset whatever VAT I'm paying you. I'm offsetting it from the VAT that I'm charging my customers. So in that way, I guess there's a little bit of a benefit to having a VAT number. And of course, some people that are dealing with government departments, they're dealing with big entities, they will be told that you cannot deal with us if you're not VAT registered. Having said that, I want to move on to something very similar. We've talked about tax, income tax, we've talked about VAT. I think we've exhausted the topic of pay as you earn at this level. Of course, I'm building, and as we go into other evenings, I will delve into more complicated topics, more detailed analysis, and things that may just boggle your mind. But for now, we're dealing with the basics. For those of you who have just joined us, my name is Carol, your online accountant, your tax practitioner, based here in Johannesburg, South Africa. Please do like the broadcast, and please join us. Go online And please see the rest of our videos. Please subscribe, be a part of this community, and join us. Every Thursday evening, we are here 7 o'clock, and every Thursday morning, we're online as well, 10 a.m. So if you go on our channel, you will see us. We are live. Plenty of shorts, plenty of videos to educate you. Back to what I was saying. So having talked about VAT, having talked about pay as you earn, having talked about income tax, those are the main taxes. But as I said, there's other things. There's customs tax. So people register and they get, for instance, an import code. If you're wanting to import certain things from China, for instance, or wherever in the world, your clearing agent will tell you you must have an import code, right? That's another registration of tax. And then there's also an export code. So it's not the same. You have an import and you have an export code. With the export code, that allows you to export goods and services. So those are all registrations that have got to be done. And then, of course, there's other complex ones, such as we call them remover and bond, and so on. We're not getting into those tonight. Tonight, I just wanted to focus on the main taxes and what they are and how they all work together. And to make sure that you have a full understanding, you don't get fooled out there, and you don't make wrong decisions. Because a lot of people, they don't know exactly what it is that's going on in the economy, and they make wrong decisions. If you register, for instance, and you have a VAT number, please ensure that you're submitting your VAT return. If you're not trading, you can still submit a zero return. If you do not submit that return, you're opening yourself up to penalties. So make sure you submit those returns if you have a VAT number. If you have a pay-as-you-earn number, you're registered as an employer, you're able to deduct and do pay slips, please make sure that return is also being submitted. And if there's nothing to declare, that zero return must be submitted. Now, going back to all these income tax returns for companies, for individuals, please remember, if there's no earnings at all in that particular year, and by year, I'm talking about the year as per your year end, as per, the fiscal year, and whether it's the year end here in South Africa, which is February, or your company year end on your registration document. When you are submitting your return, please, if you have not had sales, if you've not had turnover, if you've not traded, you still need to submit a zero return. Don't just sit at home and say, I see clients who tell me, oh no, for 5 years, I haven't had a bank account, I haven't traded, I haven't made any money, therefore I didn't submit any return. Remember, SARS still needs you to actually say that you have not traded. How do you say it? By submitting the return. If you don't submit the return, they assume that you've been trading and that you've simply violated the Tax Act. Having said that, there is a little word called compliance. What is compliance? Compliance is simply making sure that all your returns are submitted up to date, on time. Any amounts due to the Revenue Authority, whether it's VAT, pays your income tax, they are paid on time. So if you know that you're registered, you know that you have a tax number, you need to submit your returns. Another thing I need to mention, I should ask a question and then answer it. Who should have a tax number? Well, anyone within the Republic, and here I'm talking in South Africa, and I'm sure it's the same anywhere in the world. If you are within the Republic and you are earning income of any kind, you need to have a tax number. Now, that includes babies who are 2-year-old and who are modeling and who are receiving an income. We have to register and get them tax numbers. It includes children at university who are not working, but whose parents are investing for them and creating money for them to be able to invest at a certain stage. They need to have tax numbers. They need to submit tax returns because they need to report to SARS. Having said that, I believe we are almost on our 30-minute mark. I hope you've enjoyed the broadcast. I've had fun. Enjoy the rest of your evening. Keep warm. Please hit that subscribe button. Please like our channel. Please share our videos and have a good one. God bless you.